Okay, let's just get right to it. If war starts tomorrow, it's a chilling thought, right? But it's a question we have to answer with a clear head, especially when it comes to our money.
So let's get specific. Imagine a global conflict kicks off. Where does your money actually go? Because here's the thing, it doesn't just vanish into thin air. But for anyone who's unprepared, it sure can feel that way, especially when the headlines start screaming.
You know how it starts? First, it's just noise. Rumblings of trade wars, a little economic friction here and there.
And then that noise gets louder. It starts to escalate into currency battles, real geopolitical threats.
And it all builds up to this one feeling: pure, headline-driven panic. It's that state of anxiety that makes good investors hit the big red sell button at the absolute worst possible time.
So how do we cut through all that chaos? Well, in this explainer, we're going to build a calm, strategic plan. First, we'll take apart that one panicky question everybody asks. Then, we're going to reveal the single biggest secret, where money actually goes in a crisis. We'll look at gold as your insurance policy, silver as a volatile wild card, and then the big three: oil, stocks, and cash. And finally, we'll put it all together into a simple framework that's all about preparation, not prediction.
All right, section 1, the question everyone asks. Let's tackle that gut reaction, that first thought that just flashes into your mind when the world feels like it's spinning out of control.
Asking yourself, should I just sell everything? Well, that's not a strategy, it's a surrender. And as this slide says, it points to the real problem. Most people don't manage their money, they just react to headlines. It means the news cycle is pulling your strings, not your financial plan.
And that brings us right to section 2. And I mean this. This is the single most important mental shift you can make to get through uncertain times. You have to understand where the money actually goes.
And this slide just nails it. The common belief, what almost everyone thinks, is that war is this black hole for wealth, that money just gets destroyed. Poof, gone. But the reality is way different. Wars don't destroy wealth, they redistribute it.
This quote just says it all, doesn't it? Money doesn't disappear, it moves. It flows away from the people who react emotionally and into the hands of those who have a patient strategy. It shifts out of assets that are fragile and vulnerable and into assets that offer protection.
So, let's just stop asking that panicked question, should I sell? From now on, let's ask the powerful question, where does money go when uncertainty rises? That is the question that prepares you. And now, we're going to answer it.
Section 3. The insurance asset. We're going to start with probably the oldest financial defense system in human history.
I want you to think of gold, not as some exciting investment that's going to make you rich quick, but as pure insurance. See, during major conflicts, governments print a ton of money. Deficits go through the roof. And as our trust in currencies and political systems starts to wobble, gold just holds its ground. And why is that? Because its value doesn't depend on anyone's promise. It just is.
And this right here highlights the most crucial piece of the puzzle: timing. This is the difference between being protected and feeling regret. Smart money buys its insurance before the storm hits. Retail money chases it during the storm, right when the price is highest.
Okay, let's move on to section 4. Now we're going to talk about silver, which is probably the most misunderstood precious metal out there. It has this kind of split personality that can really punish you if you're not prepared.
This slide shows that tug of war perfectly. On one side, you've got the fear trade. People buy it as a hedge, kind of like a cheaper version of gold. But on the other side, you have massive industrial demand, which goes through the roof during conflicts for things like defense tech, electronics, and energy. This constant battle between fear and industry is what makes its price so incredibly volatile.
Section 5. The essential assets. Okay, so beyond precious metals, what about the workhorses of the economy? Oil, stocks, and even plain old cash. How do they behave when the world is on edge?
Let's start with the quiet king of chaos, cash, specifically strong currencies. This quote is so important. In uncertain times, liquidity equals power. Having cash doesn't mean you're losing out to inflation, it means you have power. The power to wait out the peak of the panic and the power to act when everyone else is being forced to sell.
Now, this table shows the most important strategy of all: rotate, don't react. Let's look at stocks. The panicked move is to just sell everything. The strategic move is to rotate. Money flows out of speculative sectors like tech and luxury goods, and it flows into essential sectors: defense, energy, basic services. But there's a nuance here. It's not just about buying any old defense company. You have to think about modern conflict. It's less about traditional hardware now and more about cybersecurity, drone technology, resilient supply chains. So it's not about getting out of the market, it's about shifting to what is truly essential. Now, what about oil? It's all about timing. The price spikes on the fear of supply problems, but can crash on the very first hint of a resolution. That makes it a trader's game, not a safe place to park your money.
And that brings us to our final section, preparation over prediction. Let's pull everything we've talked about into a simple, clear plan you can actually use.
Look, this isn't about predicting the future. It's about building a fortress. And the framework is simple. Step 1, protect. You build your defenses and you diversify before the crisis hits, not after. Step 2, survive. You use your cash and your patience to just calmly ride out the storm. And then, Step 3, profit. When the panic is over and things clear up, you use your position of strength to buy great assets from all the people who were forced to sell.
And this is really the bottom line. Markets are just machines that transfer wealth from the emotional to the prepared. They don't reward fear. They don't reward predictions. They reward a plan. So the only question that really matters isn't if something is going to happen, but simply, are you prepared for it?